Hey guys, welcome back to the Fairway Mid-Atlantic YouTube channel. Today we're going over 5 things that you absolutely shouldn't do when you're applying for your mortgage. Last week we went over the actual mortgage application and what you should expect, documents you need to prepare, and everything else involved in the process. We post new videos every Friday all about the home buying process, mortgages, personal finance, and so much more. So don't forget to hit that subscribe button down below, and then let's get into it. So buying a house, as we've said before, is a huge financial investment. And with that huge investment comes some things that you should keep in mind during the process to make it as smooth as possible. If you watched our video last week about the actual mortgage application, then you know that you're required to hand in a lot of documentation all about your financial picture. That means most recent pay stubs, bank statements, credit reports, tax history, and more. In order to make sure the process goes as smooth as possible, you'll want to avoid these 5 things along the way. The first thing that you need to avoid are large deposits or withdrawals during your mortgage application process. So the most important thing during the mortgage application process is that you're required to hand in your most recent pay stubs, bank statements, credit reports, tax documents, so on and so forth, multiple times so that your lender can establish reliability in you as a borrower. Anything outside of the ordinary will show up in the documents that you're required to keep presenting to your lender and may pose a couple red flags or affect your loan details, and you don't want that to happen. So if you know you have large deposits or withdrawals coming up, try your best to hold off on them or complete them before you start your mortgage application. If you can't avoid it, then just communicate that with your lender so that they can help you along the way. Number 2 is avoid large purchases, especially large purchases on credit. So that means you absolutely should not be buying a brand new car while you're applying for a mortgage. It also might mean that you need to hold off on buying new furniture and appliances until your loan is clear to close, or plan ahead and get that stuff done before you start applying for your mortgage. Purchasing large things such as cars, furniture, appliances, whatnot, will result in new credit pulls. And those credit pulls will potentially negatively impact your credit score, which is one of the most important factors in deciding your loan amount and your mortgage rate. So it's very important that you avoid making these purchases on credit. And if you absolutely cannot avoid it, then you need to communicate that with your lender and let them know ahead of time. But our advice to you is to make those purchases well before your mortgage application or after your loan is clear to close. Number 3, don't change jobs. Now, this one may be a little bit outside of your control, but if at all possible, you should be keeping the same job that you have. And this again relates back to your financial picture. Any change in payment will show up on the bank statements and pay stubs that you are required to hand in during your mortgage application. So if you know you have bonuses coming up or a pay raise coming up, you need to communicate that with your lender so that they know what to expect during the process and can account for it as your loan moves through the process. But it's also very important that you keep the employment status that you have, because it signals to your lender that you are a reliable buyer with money constantly and stably coming in. While changing jobs or getting promoted is a great thing, it also comes with changes in payment and taxes, and that stuff will show up during your mortgage application and can impact the details of your loan. So again, just communicate with your lender what's going on. Number 4, don't close out credit. So if you have lines of credit that you don't necessarily use all the time or have recently paid off, don't close those lines of credit during your mortgage application process. It may seem like a smart thing to do to finally check that box off of your debt, but during the mortgage application process, that can affect your debt to income ratio, which is an important factor in deciding your loan amount and your mortgage rate. All of this connects to your overall financial picture and shows your lender what position you're in and if that position is the right one to be in to give you this loan. So consult with your lender or a trusted financial advisor before you make any big decisions about your credit and debt situation. And lastly, number 5, keep up with your current credit payments. So if you have things like student loans, car payments, credit cards, whatever it may be, keep up with those payments as you're going through the mortgage application process. You will have to turn in documentation of your current financial situation, likely many times. So it's important to keep up with your current credit situation so that your credit report or your credit score doesn't change. That credit score is so important in deciding your loan amount and your mortgage rate. So make sure that you continue to pay off your debt in the way that you have been to continue to show your lender that you're a reliable buyer and you can absolutely take on the responsibility of a mortgage. So those are our 5 don'ts when it comes to the mortgage application that you should absolutely consider as you're going through the process. Applying for a mortgage is a huge deal. While all this information about the documents you need and the steps that you should avoid and the steps that you should take can feel overwhelming, we promise you that your lender is there to help you. And we want to give you this knowledge in the hopes that it will help you understand the process and what's going on and give you a sense of empowerment and control over how you're going through this process. Buying a home is such an exciting thing to do. You are making a huge financial investment into yourself, your family, and your future, and that's something to celebrate. So taking all the steps necessary to make this process go as smooth as possible is only going to help you in the long run. 5 don'ts in mind when applying for your home mortgage or when starting your home buying process. If you haven't started the process and have questions about where you should start, head to our website and contact one of our loan officers today. They're always willing to talk to you about your options and path to home ownership. If you missed our home buying series so far, you can find it in our home buying series playlist on our channel. Next week, we're diving deeper into the benefits of home ownership and building your personal wealth. Home ownership is one of the best investments you can make into your personal wealth. And we're gonna go over things like equity, debt to income ratio, how that impacts your loan, and so much more. So to make sure that you don't miss next week's video, hit that subscribe button down below and like this video so that we know what content to keep bringing at you. We'll see you next week. Thanks for watching.